Are home sales starting to stall? And with rising mortgage rates, what does that mean if you're a buyer? Thanks for tuning in. My name is Joshua. I'm a local realtor here in the Sacramento and surrounding areas. And let's jump into the data that I have here from NAR. And it says pending home sales dwindle 4.1% in February. Contract signings fell for the fourth consecutive month, down 4.1%. And contract signings fell from the previous year for the ninth consecutive month, falling by 5.4%, with pending sales down across all regions. Now you can see here, this is a graph. The West is down month over month, 5.4%. The Midwest is down 6%. The Northeast actually saw an uptick, 1.9%. And the South is down 4.4%. Now, three of the four major U.S. regions saw contract signings fall month over month, as we just saw, and the Northeast being the only area that reported an increase. And year over year, the transactions have dropped 5.5 or 5.4%, excuse me, and it is mainly due, according to Lawrence Young, mainly due to the number of homes for sale. Now, buyer demand is still intense, but it's as simple as one cannot buy what is not for sale. And if you're in the marketplace, if you're looking for a home here in the Sacramento and surrounding areas, reach out to me. I actually go out and find the opportunities for you. A lot of the times, these aren't properties that are on the marketplace, and we can facilitate something that doesn't have much buying demand or even any buyer demand on them. So reach out to me here or wherever you are watching this video. I'd be gladly to assist you in having some great opportunities. So back to the article. Now, along with climbing home prices, Young added, now buyers must grapple with rising mortgage rates, and noted that shoppers will likely want to lock in before rates increase further. So now, if you're a home seller too, now is more crucial than ever. We have seen a huge uptick in mortgage rates, and we are still at historically low inventory. So it's still a great time to sell a house. But if you continue to price the house, or if you just think that with this crazy marketplace that buyers are just going to simply pay whatever they want to for a house, that is sometimes true, but the market is always going to either give you what you want or give you crickets and not give you anything at all. So it's extremely crucial to have a great pricing strategy, especially in this fast-paced market. So reach out to me too if you're looking to sell a home. We got great strategies that have been proven and are constantly adapting to this fast-paced market. Let me know. I'd be glad to help you. So back to it. The home sellers cannot simply bump up prices in the upcoming months, but need to assess the changing market conditions to attract buyers. Now, this is just what I said about if you're selling a home, you have to have a good and changing marketing strategy for your property to make sure you attract the buyers and get the demand on the property if you're going to sell on the marketplace. Now, as of February of 2022, higher mortgage rates and sustained price appreciation has led to a year-over-year increase of 28% in mortgage payments. Pretty big. The surge in home prices combined with rising mortgage rates can easily translate to another $200 to $300 in mortgage payments per month, which is a major strain for many families already on a tight budget. Now, Young forecasts mortgage rates to be about 4.5 to 5% for the remainder of the year and expects about a 7% reduction in home sales in 2022. Now let's actually I'll jump into this index first. And you can see here, I got October of the United States in a whole. So this is what NAR is looking at whenever they did this article. And this is the pending home sales index. And this goes all the way to February of 2021. And you can see we've had a strong 2021, right? And October was the best across all regions, pretty much. We were close in the Northeast at 97.4, but pretty much all throughout the United States, October was the high of the pending home sale index, right? And ever since then, all of them across the board have had 4 straight negative months. Now, we are coming into the spring and summer home selling season, which typically we see an uptick. So these numbers may change, but if we start to see continued slow growth, it's going to be very interesting to see how that's going to affect the marketplace on top of if interest rates continue to rise. So you can see over on this graph, everywhere across the board, as I just said, is coming down. And let's go and take a jump at what mortgage rates are actually doing here. And this is from Mortgage News Daily. We can see the 30-year fixed rate mortgages. And this goes back from January of 2017. You can see here on, let's get the uptick. So this is November 13th of 2018. Mortgage rates were at 5.04%. Since then, we've seen a sharp decrease up until the recent, basically until the beginning of this year. We really started to see interest rates continue higher, and we are currently at 4.95% for the Mortgage News Daily Index, 4.95%. So we are almost near the highs of 4 years ago, currently today. And if we jump into, so this is the housing, this is the FRED, this is the Federal Reserve, St. Louis FRED's chart index of the months of supply for the United States. And this goes all the way back to January of 2008 or September of 27. You can see it, the months of supply continued to go higher into the recession before it all came crashing down into January of 2013. And we are still teetering around historically low numbers of homes for sale. So it's going to be interesting to see if into this the spring and summer season for the real estate, if it continues to go higher or if it continues to go lower. We will keep an eye out for that and see what happens. So back to the article. It says home prices themselves are still on solid ground. They may rise around 5% by the year's end, and we should see much softer gains in the second half of the year. And this just basically goes over the data from what I just showed you right here. The Northeast PHSI index rose 1.9%, and where is the Northeast? Northeast right here. So it rose in the last month, but overall, compared to last year, is down 9.2%. The Midwest is down 6% for year over year, is down 5%. And the South is down 4.3%, with the West being down 5.3%. And these are seasonally adjusted numbers. So the question I asked you guys is, what do you see in the current marketplace? If you're actively selling, if you're actively buying, let me know what you think in the comments below. And if you like this video, leave me a thumbs up, leave me a comment of what you like, what you don't like, any improvements, any feedback in general would be great. And until next time, I appreciate it. I'll talk to you guys soon.